Welcome everyone. Market wrap with Pankaj Pandey sir. Sir, once again खुशहाली के दिन अभी भी बरकरार है. निफ्टी अभी भी 80H के आसपास है. क्या बन रहा है मार्केट में सिनेरियो सर?
So hi, good afternoon, Vishu. See, overall, we have seen good gains for Nifty this week, about 0.7%. In fact, small cap did even better at 1.7%. And now our sense is that, see, with this kind of a nearly 1,000 point kind of a move, some consolidation is what we would expect because, see, market एक unidirectional move नहीं आता है market में एक period of consolidation आता है. And I think what might trigger this consolidation is again geopolitical events because largely if you look at Iran is quite sort of hell-bent upon taking some revenge with Israel. And that could have some ramification, some knee-jerk reaction in the market. So our sense is that probably market should consolidate in the range of say 22,400 to 23,000 kind of a range. And which should be a healthy sort of a consolidation. It does not mean that a complete reversal of the market direction. But somebody who has not really sort of utilized the last upturn can use the potential consolidation to sort of buy stocks. I think since we are entering into result season, you will see more of stock specific move. But having said that, sector wise, IT, obviously Infosys numbers have, so the TCS numbers have come. Then I think the entire IT as a pack is going to be in limelight, plus BFSI, metals, and I think power is another sector which should sort of keep doing well. And I think one interesting thing which is going on is in bullion, so which is gold prices are at lifetime high, and it has implications across. But what is coming out is that a lot of Chinese-led buying is also sort of happening. So one, there is a de-dollarization which is happening because a lot of central banks are curbing their overall treasury holdings and buying gold. The other is that in China, neither the stock market is working for the investor. Now the property market is also facing challenges. So एक ही option बचता है gold. So I think gold is finding favor from that side also, and which is a very interesting thing if it sort of takes further shape. So overall, I think consolidation, but some interesting things are definitely developing.
Right, absolutely, sir. I think the mutual fund numbers are also out for last month. Although people were scared a little bit of small caps and mid caps, we have an interesting activity there as well with regards to mutual funds, sir. Right?
Absolutely. I think one is when you look at the SIP inflows 3 years back, we used to get about 9,200 odd crore more. What you're sort of getting is nearly sort of a double of that run rate, so 19,270. Now, overall inflows have been sort of quite robust at some 22,600. Now, obviously, if you sort of exclude NFOs, even then the inflows are sort of good at 19,600. Now, key takeaway is that one, large cap was not getting sufficient inflows. They've started getting inflows. And one worry was that a lot of mutual funds were sort of highlighting concerns, especially in mid caps and small caps, that a lot of valuations have gone sort of quite high, and which is why they were sort of curbing inflows. So obviously, last month we have seen about 16% kind of a correction in small caps. So people haven't really put that kind of a money, and which is why you are seeing a net outflow in small caps happening after September 21. But our sense is that this is going to be short-lived because we all know that while the small cap corrected by 16%, it has recouped most of the losses. So I think confidence is back. So that should be visible in next month numbers. Unless something else happens, otherwise our sense is that largely the inflows from SIP or overall NFOs or the inflows domestically are going to remain intact, and which is going to keep our market quite buoyant and will keep a lot of faces smiling. So,
right, absolutely. Sir, although you briefly touched upon gold already, but my next question is, us as retailers, of course, we could just buy gold and sit on it. But other than that, are there any opportunities available for retail investors which they can benefit from in this gold rush?
Absolutely. I think one is, see, gold sort of inching up higher is obviously retail buying can be done. But when you sort of look at how you can sort of tap that opportunity, obviously one leg what investors can look at is your gold finance companies. Now, we had a previous recommendation in Manappuram Finance, and which is what we have sort of closed today. But in general, it is very positive for gold finance companies because what happens that once your value of collateral rises, you can increase the ticket size or your business can sort of grow. Then there was also a concern in terms of by central bank in terms of not so central bank was concerned that one should, or bank should not really grow their unsecured book very much because that might impact. So that inherently sort of benefits this kind of a business where gold is used as a security. So overall, our sense is that this is definitely beneficial for gold finance companies, Muthoot Finance, which is trading at about 2.4 times, or Manappuram, which is trading at 1.2 times. And even some of the banks, like say CSB Bank, I think this bank about 40% of the book is on the gold loan side, and this trades at about 1.6 times. So obviously, it does help all these companies in terms of having better business growth going forward because the gold prices have appreciated.
Right, sir. And just as we are talking, I think TCS results are just around the corner. So what are our expectations there, sir?
So TCS results have been just disclosed. While we'll have to study the numbers in detail, but overall sense is that largely the numbers on expected lines because expectation was that the dollar revenue would grow by 1.2%. The growth has come by 2.2%. What is good is that the margins were expected to go up by 20 bips, but the margins have actually gone up by 100 bips. I think one big positive surprise has been on the TCE front. So deal inflows have been pretty strong. So it has come at some $13 billion compared to $8 billion the quarter before. I think this needs to be checked. Otherwise, I think some of their key sectors like segments like BFSI tech, I think there has been weakish growth. But I think a lot depends on the commentary. But the initial impression of the number, it's a quite decent set of numbers from TCS. And good part is that when you look at it from a valuation perspective, it's largely trading on 5-year historical average. So obviously, not much is sort of built into numbers. And any kind of a positive surprise does help. I think the only challenge is that when you look at the US inflation number, the kind of a rate cut expectation has been sort of pushed to the second half from September onwards, which was earlier June onwards. So I think that is the only sort of a negative context of what we are sort of looking at from an IT recovery perspective. But standalone companies can do well. I think TCS commentary is what we'll wait for further details.
Right. And sir, I think there's some news with Exide Industries as well. I think we are getting last week also we were discussing there was a JV happening around where electric vehicles ke liye people were teaming up to form an ecosystem. And now this week also we have a news of Exide Energy Solutions work teaming up with other players in the industry. So is this the rise? Is this the new trend where people get together and then tackle the CV challenge?
Absolutely. I think Exide Industries, we have been positive since the level of, say, 260. Our previous target was 400. We have been recommending the stock in conviction ideas. The last recommendation was in Shubh Nivesh with a target price of 400. That's been achieved. Now, reason for liking Exide has been that your traditional lead acid business will keep growing at low double digits. The icing on the cake was the new vertical of lithium-ion battery space, where they are spending, or they will be spending about 6,000 odd crores for putting a 12 gigawatt kind of a capacity. And initial phase, they're spending about 4,000 odd crores with a capacity, with a capex of nearly 4,000 odd crores. Now, if they are tying up with one of the biggest players like Hyundai, obviously that validates the entire business confidence in the company, and definitely helps the company in terms of taking further steps towards changing or making their business model a lot more robust. So we continue to remain very positive on this company. I think post results, we will look to sort of further review our valuations and growth metrics. But I think one should remain positive on the stock. And not only that, we have been also liking Amaraja also, but compared to Amaraja, Exide looks a lot more durable because their technology tie-ups have already been done. I think Amaraja is still to sort of do that technology tie-up. But this is one good case of validation of the entire ecosystem for auto ancillary. And I think this goes a long way in terms of the ancillary industry is becoming a lot more or will become a lot more bigger and better going forward. So Exide looks quite charged up.
Right. Awesome. Awesome. And I think Tesla, while talking about EVs, I think Tesla is also planning to make a big splash.
Absolutely. I think this news has, people have been waiting for this quite long, for I think years, if I go by social media. Now, yes, initial expectation is that Tesla will invest $2 to $3 odd billion kind of money is what they are going to put up. And we also know that a lot of states are vying for them to sort of set up the plant in their respective states. Now, this is very good for the Indian ecosystem, EV ecosystem, because if a big company like Tesla sort of comes in, it obviously sets the bar quite higher for a lot of companies, the entire industry as such. Now, there are some companies which are in our coverage, which are expected to sort of benefit from this. See the likes of Sansera Engineering or Mayur Unicotors or Uno Minda. But there are some companies which you don't track, but they might also benefit. One is Sona Constar, then you have Motherson Group, then Suprajit Engineering. But overall sense is that this is happening because the government has sort of relaxed custom duty norms recently. And so this is a sort of a next step, which is what was expected, but definitely a very positive step. And it goes on to show that the entire auto industry has got further legs domestically and has the potential to sort of become a lot more global and is going to contribute a lot more meaningful because the overall auto as an industry is extremely important from a country perspective because they contribute nearly 7 to 8% of the India's GDP. So they're quite sizable.
Right. Sir, on one hand, while we have such big positive developments from the EV end, at the same time, I think we are still not leaving coal behind. मतलब ऐसा नहीं है कि we are leaving coal completely. I think recently we have had, I think there was a news around that how we are planning to add our coal capacity.
Absolutely. I think, see, the good part is that while we are moving into newer sectors, but our energy requirement is going to be so much that even coal would be needed. And which is why now you see companies like NTPC or companies like BHEL putting up thermal power capacities. Now, Coal India is obviously one of the biggest beneficiaries because you need coal for it. Now, recent news is definitely positive for Coal India because Coal India was considered to be a sort of a dead company because eventually coal is the most polluting of the fossil fuel which we have got. Now, government is looking to sort of open 10, 20 new mines, which will have a capacity of nearly 100 million tons. And we all know that Coal India is aiming for nearly 1,000 million ton kind of a coal production capacity. And on top of it, the Coal India also produces coking coal, and which is where they are sort of looking to put coal washeries to sort of coking coal is again used in steel industry. So obviously we import a lot of coking coal, especially and it is a high cost item. So from that perspective, it is import substitution what we are looking at. And another interesting thing in Coal India is that you're sort of diversifying your model from not only coal, but you're going into coal gasifications. You are making gases from coal, which can be used for making ammonia and subsequently fertilizer, or which can be sort of blended in your city gas distribution networks or pipe distribution networks. So that way you have multiple legs or multiple usages of that particular gas. And Coal India is one of our top picks in the large caps because one, it's still trading at 5 times EV by EBITDA. And our sense is that even from a P perspective, we look at if a business model is changing for better, there is a potential for re-rating. So we have been positive on Coal India with a target price of 550, and hopefully with news like this, you will see probably even more further upsides.
Right. And talking about coal, I think there's another industry which environmentalists are not very happy with, which is steel, because it also causes a lot of pollution. But I think there also a lot of capacity addition is expected.
Absolutely. I think when you look at China, so China has got nearly 980 or 990 million ton kind of a capacity. We are still sitting at 160. So last year, good part was that we had seen a volume growth of 12% to 140 million tons, and now the World Steel Association expects 8% kind of a growth for the next 2 years. So obviously, 300 million tons is what companies are capacitizing themselves for the capex. I mean, look at all the big names; they're doing the double the kind of a capex what they have historically done. But what government is looking to do is now looking to sort of take this capacity to 500 million tons, and this would be required if you are going to sort of do massive infrastructure spending. So I think everything is falling in place for even steel industry. Definitely positive for the entire steel as a company, and I think even positive for some of the names like say HEG. We have been recommending HEG earlier also because you will produce not steel not only from blast furnace route but even from the AF route wherein you use steel as a scrap. So I think this is one sector which is very core to any economy, and I think if you are looking to sort of build further capacity there, I think it talks about or it really sort of reinforces that the confidence that the overall economy is going to sort of shift higher or next orbit is very much in the cards for the
Right.
entire country.
Right. Absolutely. And finally, sir, I think we also had pharma sectors report just coming out from our house, right?
Correct. So pharma industry growth on the face of it, if you look at the growth is some 7.5%, looks slightly muted or lower end of the range of the 8 to 12 odd percent. But I think one needs to add the trade generics. So sort of if you sort of look at that adds about another 1.5%. So numbers don't look bad. See, volume growth has been flattish, but the industry has been very calibrated in terms of taking price hikes. So they've taken price hikes of only 4%, and then they have launched new products, which has contributed to 3% of growth. Good part is that the quality of growth is getting better because your chronic segments are sort of gaining market share, or there the growth is better because that is where the volume or the growth is a lot more durable. And we are positive on the entire as a space. I think some of the companies which have done well is Sun, Cipla, Abbott. So all your domestic oriented names continue to sort of do well. And I think we continue to prefer chronic focused players such as Sun, and DRL, Cipla, Abbott, and Ajanta. So I think not a very great news, but I think this industry has been sort of chugging along without taking major hikes. So that way, I think no major negatives is what I would say from this broader annual growth numbers.
Right. Awesome. Great, sir. And finally, without, of course, our weekly gem, we can't let you go to, sir. What would be our hidden gem this week?
We're talking of so much spending on infra. So road is also another segment where big capex is expected next, I think, 15, 20 years. So we have already sort of expanded our highway capacity, nearly doubling to 1.5 lakh kilometers. Now, expressway is the new buzzword. So we have under 4,000 kilometers of expressways, and now overall expectation is that you will take this expressway to somewhere about 50,000 odd kilometers, and obviously that means a lot of business work for a lot of these infra companies. So what I'm recommending is HG Infra with a target price of 1250. Now, this company has been largely a road-oriented player, but they have recently sort of ventured even on the railways and also on the solar side. Good part is that it's a sort of a debt-free company. Order inflows have or order book was some 9,600 odd crores. And Q4, that was till Q3, and in Q4 they have won orders worth 4,700 odd crores. Our sense is that with these orders, they can easily deliver overall, 15% kind of a growth and 17-18% kind of a bottom line growth. Interesting thing will be that post budget, our sense is that as and when the budget gets announced, I think these companies ideally should get a lot of orders or a lot of work, and which is where I think the excitement will come from. So up till now, this year the ordering has been weak, but I think that we should do that catch up for next year, and which is why I'm recommending some of these infra names, which will benefit from the overall infra spend, which is going to happen in future.
Right. Awesome. Thank you so much for that, sir. And thank you so much, everyone, for watching this video. If you have any questions for Pankaj, sir, please do drop them in the comments. Also, leave a nice comment for others to see this video. Thank you so much again, sir. We'll see you next
Thank you.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.